Will now be recorded.
All right, good afternoon, folks. Welcome to today's 4:15 webinar. It's Elliot on the mic, and today is Tuesday, the 10th of March. Everyone's had a good day. We've been continuing with our volume profiles for today. We've been focusing a little bit more on the value areas, a few small setups you can look for with these, as well as kind of trend confirmation through value area migration, as well as points of control. So we've focused mainly on that today, so we'll kind of have a look through these as we check out the assets for this afternoon. Just on the calendar front, it's been a relatively quiet afternoon. There's not been too much into this afternoon, not too much going on into this evening. We've got some crude oil stock changes, which will be worth looking out for, see if there's any added pressure to support either direction that we are currently going for oil. Tomorrow we've got a bit more going on. We've got our inflation data for the US, potentially overshadowed somewhat by the current geopolitical situation. However, it will still be a big piece of data to look out for. Right? Lots of concern at the moment in terms of geopolitics from a US dollar stance is going to be around the potentially inflationary impacts of this. Right? Is the increase in oil price going to be adversely affecting the current rate of inflation? Is that going to have a knock-on effect to the current path for the Fed? Unlikely, very unlikely this is going to be affecting the current release. However, going forwards into our next releases, that's when we might start to see a bit more of a impact in our inflation readings. So we'll be looking out for this, seeing just tomorrow, it's expected to remain the same pretty much across the board. Small increase on the month-on-month figure, and the core figures will due, or month-on-month for the core figure is due to decrease slightly. So not too much in the forecast going on. But we'll still be looking out for, is this starting to creep higher? Is it starting to creep lower? What does this mean for the Fed at the moment? With the potential, obviously, for this to be thrown around a bit by the current state of affairs and the current price of oil, etc. So tomorrow will be a bit more interesting, so we'll have a look at that then. In terms of headlines, I would say more or less it's positivity. I mean, it's obviously still conflict going on, but the comments being made are seemingly being taken well from the markets, right? They are seeing this as positive. We have got kind of green across the board here for our US indices, our European indices, the FTSE. Gold and silver also starting to trend slightly higher. We've seen a little bit of downside again in the US dollar as well. So it does look like the current comments coming out are being taken as possibly good ones, de-escalating the situation. Comments, most of these are just around talks with Iran, the fact that they're not intending for operations to expand. How much of this will actually take place and how this actually develops is a different question. But markets seem to be pretty happy with the way things are developing at the moment, or seem to be. So we'll just be looking out for further confirmation in either direction, whether this positivity continues, whether there is kind of a de-escalation going forwards, or if this is just comments being thrown around and actions are different. We'll just have to keep an eye out and see how this progresses. Otherwise, it's not been a massive amount. Not a massive amount out. So that's really what we're looking for. A pretty quiet calendar day. Tomorrow, inflation data is going to be the main hitter, so we'll be keeping a close eye on that and seeing what that comes out like. Cool. Let's have a look at some of our profiles then. We've got Kiwi Swiss. Let's start there. Kiwi Swiss. All right. We'll start from a bit of a swing trade basis. We'll go from a bit of a 4-hour chart. We had been looking at this before it was kind of a little bit in the middle at the time, but we had this longer term rising wedge, a bit of a shorter term falling wedge. And we did say whichever direction this breaks out will really confirm which pattern will likely follow. That rising wedge did break out first, so I think we can make a fairly good assumption that this downtrend, for the moment at least, is continuing to prevail. So we've broken out through this current price action here, very choppy. Again, a bit of a risk on, risk off situation for the New Zealand dollar and the Swiss franc. So being thrown around a bit, as are lots of our assets in the moment. If you found it tricky to trade through these last few days, it has been, right? It's been lots of headlines, lots of changes of direction, lots of changes in sentiment, and it's made it quite tricky. So don't worry if you've struggled a little bit over these last few days. Leaves us with this, which, yeah, I mean, at the moment, it's just very choppy. Very choppy. For the higher time frame, downtrend still very much intact. Still very nice within this longer term downtrend, so that's good. Shorter term is a different story. So would I really want to rush in to enter a trade amid all this kind of choppy price action, all of this kind of adjustments of risk on, risk off, and comments coming out? It makes things a lot trickier to decide. We're kind of holding inside of this range. I would take this as the range high. This is our current range low. So one of two options here, I suppose, would really be, and again, it is a little bit at the mercy of risk sentiment, but trading back up towards the high of this short-term range could give us at least a short-term resistance level to take a playoff, take a bit of a short position, at least trade it down towards the lows of this range. Or if we do start to see the continuation of this downtrend, there might be the opportunity to manage that trade. If I was going for that, I might be inclined to have a slightly wider stop. So something like this could be potential. Otherwise, taking the break of this low would be a nicer thing to see. We've broken out from this range. That trend is then at that point, much more likely to continue. Best place for the stop loss for this would be above this short-term resistance range high. And it does leave obviously not the most exciting risk to reward, but 1-to-1 still absolutely fine. That, I think, for this is really all we can really ask for at the moment. Again, downtrend, very long term. This is 2014, massively long term downtrend we've got going on here. So for now, obviously, wouldn't really want to go against this. Wouldn't really want to try to fight that trend. So any one of these three options could be what we're looking for. Profiles for this kind of a scenario also become a little bit trickier. It is still choppy. It is still a bit sideways. Those profiles are probably going to reflect this as well. But we will see some short-term shifts in price acceptance along the way. We have, in between our upper and lower end of this range, we have got some nice short-term trends forming, which provide one of two things: either a good entry price or a good entry point, a good confirmed breakout through a counter trend line, through a previous swing, say through here, for example, break the previous higher low, or not quite. Okay, yeah, that one's not quite as good. But in this case, a break of a previous confirmed higher low could give us a bit of an entry price and a nice confirmed breakout to see that move through. Or alternatively, short-term trades intraday alongside this short-term trend. Right, as this is trending higher, we could be looking maybe to take a few trades alongside this. Maybe still favor the downtrend, maybe still favor the short positions, but depending on the trade and the situation, there could still be the chance for upside. Again, profiles here is going to be pretty sideways. There's going to be lots of inside days, lots of choppy up and down points of control. For today, we did have what looks like an okay situation. We've started to see this new uptrend formation. We had the point of control. Again, we're not focusing on today's one. We can kind of ignore this. We're focusing on yesterday's. Mine is facing on the left, on the right-hand side of the chart. Yours might be on the left. Same profile, same day. It's just placed slightly differently on the chart. So we're focusing on this day and maybe the day before it. So what we have here is a bit of a shift higher for the point of control. So market participants are accepting higher prices based on the fact that we have seen the most trading volume at this price level here versus a level, say, down here where we've traded here, but we weren't so happy to trade there. There wasn't as much trading going on. There wasn't as much trading volume. If we're not happy at the current price, right, sellers are going to say, I'm not going to sell this at 0.45802. I'm going to sell this at 0.5851. And if buyers accept that price, we see this market move higher, right? And if they've accepted a price as fair, and this is the correct value, we'll just chop around, we'll consolidate, we'll see the build-ups of volume versus areas where we don't. So we've seen this push higher, we've seen the acceptance higher, so that could have given us at least a short-term intraday bias to be long for today, which could have worked out, right? So one thing we could look for here would be trend line at this point, not really valid, so we can kind of ignore that for the moment. From a profile standpoint, one of the key areas that I find the most useful, there are obviously lots, and I'm sure you've probably found there are lots of different levels you can take, but for me, the areas of thin volume are generally zones that I find the most important, at least for my trading. Different for everyone, which levels you prefer, different based on the strategy, different based on the asset potentially, but for me, these are the levels that I personally like the most. It does leave you with quite a few levels. So we could say, this is an area of thin volume. That could be our support at the start of the day. There's a big cave of thin volume down here. We might see the price down to there. So when you're looking at some of the levels, especially low volume, high volume, you can end up with several different levels throughout the day. To avoid entering there, getting stopped out, entering at the next one and it continue getting stopped out and then finally getting the trade on the last one. To avoid this, we really want to do two things, really. It's going to be lining up confluences, and the main areas we can look for here are going to be our general support and resistance, our short-term trend lines, our Fibonacci's. We can look for maybe other profile levels to line up with this, just to give us a bit more, maybe a moving average to line up there, something to give that particular level more confirmation. If the price gets here, there's multiple levels of interest that could see different people watching the same level for different reasons and ultimately trading around this point. So lining up those confluences. Now, in this case, we got the short-term uptrend. Again, we haven't got the trend line, but we could look for a fib retracement. So this short-term trend that I'd be looking at here is, this is the low, this is the high low. This is the higher low, this is the higher high, this is our pullback, this is our current move up. For that fib retracement then, we're going to be taking it from this low, measuring the move to the high, pulling it across, and it looks like we've got that lining up with this area of thin volume. Now that allows us to kind of eliminate this one, because this particular area of thin volume has got another level of confirmation around this point. So we can say this is a stronger zone. I can disregard these two. Yes, we might miss it if it does come off this, but so be it. We're not going to get every trade. That's just one we won't have. Now, granted, this did happen a bit early, but we'll see how it looks. So that's one thing we can do just to give a bit more confirmation on the level itself. But we also need confirmation on the entry. So we're not just going to say, great, I've got these two levels lining up. I'm going to place an order to go long, and that's it. If it touches that level, I'm going to get long, and that's the trade. It doesn't really protect us for the potential of this just smashing through the level, right? We need to take confirmation on the entry as well. And this is generally referred to as a trigger. This is the last thing that happens before I take a trade. It is ultimately something that is generally a breakout, because a breakout will be, for example, if we've got a area of support, my expectation for this support level, maybe a 30-minute support level, is that, well, basically buyers should step in. Quite simply, if that price comes to this level, previously buyers have been here, and my expectation is that buyers are going to drive this market higher again. But I don't know that for sure. Again, we're not necessarily trying to predict what is going to happen here. We are trying to build up a trade idea that has a potential outcome, and the probability of this outcome is increased once we see the sequence of events that would need to happen. So we're not just trying to rush in. We've got a level of, in this case, support where we think buyers might step in. And we can then look for, in this case, the confirmation on the entry could be the break of a resistance. Break of a resistance, because this is where we currently are seeing selling pressure stepping in. Now it's probably going to be a lower time frame. So we got 30-minute support level and maybe a 5-minute resistance. If these buyers off this level are strong enough to at least overwhelm these short-term sellers, that just tips the scales more in our favor, right? It adds that last bit of confirmation. It tells us that buyers are at least present to some degree, and the probable outcome that we make our way to the next level up here is now greatly increased. Versus if I just jump into that trade as we touch that level, because at this point, not really had much confirmation that buyers have even started to step in here. So taking that last bit of confirmation to help us confirm a level is going to be another way of just making sure we don't take a loss on this first level, a loss on the second level, and then finally catch the bounce at the bottom. Now, in this particular example, let's just see what that could look like. So let's say 5-minute time frame for the trigger. Let's go with this. Let's hide these. Okay, now, again, the breakout of something is going to be a good thing to look for. One thing that is quite nice for this kind of a entry is quite often we'll see a bit of a consolidation, right? We'll get essentially a bit of price acceptance at these lows. We get a bit of accumulation before we start to see a breakout happen. So if we do form a nice clear range, a break above this range could provide one potential entry point. A break above, say, a counter trend line, which is not the strongest, but we've got 1 bounce, 2 bounce, a very small retest, and then the breakout. That could provide a different entry point. Or the break above a confirmed higher low, which is not the biggest higher low, but I would say that would there, at this point, be the higher low. So very small swings through here, but there to there to there to there, down to here. This is not a higher, lower high. This is not a lower high because we never broke this low. So the break of this doesn't bear as much relevance by itself. So we've got entry number, let's be entry number 3. And then we've got entry number 1, entry number 2 are pretty close together. If those things happen, they give us that last bit of confirmation to say the chances that we make our way up towards this next level of resistance above are now much, much greater. Okay. So it's always worth doing that when you're looking at multiple levels for a day or from a profile. What have we got to confirm the level, and how am I actually going to get into this trade? So Anyway, this would have been a potential short-term long position for today. Off the low volume, short-term uptrend with a fib retracement. I would target the recent highs, but you maybe could have gone up towards this level. Still would be in play, but for me, I'd be out of that trade here, and that would be it. Okay, so yeah, tomorrow you could look for a similar thing. Do we get a similar setup as this short-term uptrend continues? Otherwise, I'd probably still be leaning towards these as the next best, but slightly longer-term trade. Okay, let's go and have a look at the deck. If you have any more questions on this particular one, feel free to ask. Let's have a look then at the decks. I used to trade the DAX quite a lot for profiles. I thought it was a very good good asset to use for these profiles. Again, I focused quite heavily on the low volume areas. So I would, for about a year or a bit longer, I was just trading the DAX and nothing else. And I was just trading off the profiles and low volume nodes. And for that, I found this was the better asset to look for those particular levels. Now, if we look at this on a bit of a profile basis first. Okay. Now, this is one of the setups that we had a look at earlier today. So with the value area, this is the dark blue section on my profile. This is showing us where roughly 70% of volume is traded for this day. So similar to the point of control, it shows us a larger area of where was this price accepted? Where were we happiest to trade? Is this moving up and down with each day? But also one thing we can look at, which I think is quite a good signal to keep in mind, is, oh, sorry, Dorinex. Yeah, we'll have a look at Dorinex in a sec, no problem. So one thing we can look for here is with this area of accepted volume, this accepted price, where we've got the value area, the points of control, it's most likely the following day opens somewhere around this accepted value, right? This is where we previously liked this price. The following day is quite likely to open up around this area as well. However, it's not always the case. Like today, what we can sometimes find is the following day actually opens above the previous day's value area high or below, just down here, or below the previous day's value area low. So this is an indication of just relatively strong, aggressive buyers or sellers at this point, right? We have opened away from that previous day's accepted value. It's generally a good sign for the following day that is going to be a potentially bullish day or potentially bearish day. Now, it's not always the case. We won't always see that play out, but it can be a good signal to take. One of the trades we were looking at today was where we've got the value area. Again, just keep in mind which days we're looking at here. So we're looking at the open here at the moment versus what would have been yesterday's value area high or value area low. So today, Tuesday versus yesterday, Monday. In this case, we've opened above, a strong sign that we've got just generally bullish sentiment within this market. So that gives us the bias to be long. What we can then look for is a pullback and a retracement into the value area high, followed by a small breakout to the upside. Again, as we were just saying, we need that confirmation on the entry in order to say the probable outcome is now that we continue up to the highs. Normally, this will be the break of whatever small high has been made in between the pullback, but you could look for other breakouts as well, that's fine. So pull back into the value area high, break out above the short-term structure that has been made on the way. Stop loss either behind the value area high or behind the point of control, and then target, up to you, whatever next level you've maybe got in mind. So this is the value area high. I think in this particular case, we don't quite make it there. So we get the pullback. We are above the value area high, opened above, pulled back. We fell ever so slightly short of this level. And you might find that to be the case sometimes. If that is the case, you might end up taking maybe a buffer around this zone. If you keep missing them, keeps falling short of this level, we can say actually that if it comes within maybe an 80-yard distance of the value area, then I'm still happy to take it. That's also fine. So in this case, we come down towards it, a little bit short, but we can still look for a break of structure to give us that confirmation. I'd probably say that would be fine. Break above there as the entry above, stop loss below the value area, and then a target towards whatever next resistance level we might have in mind for that day. So by itself, you can look for something like this, just a bit of a short-term trade setup as is. But you could also include this as part of a bigger setup. So you might say, let's see, let's look at the dollar index. So let's say, just for example, we've got a fib retracement. We've come into this 4-hour fib retracement, and we might be looking for a bounce. Now, on an intraday basis, we might be able to see a bit of extra confirmation from the profiles within this turning point. So let's see. All right. So coming for the bounce, we're now waiting for a day to close above the previous day's value area high. And it looks like, not sure we've quite done it here, but we very nearly did it there for a bit of a bounce off. Following days, not quite. This day did open above, but it didn't really come down for any kind of pullback, unfortunately. And so in this case, we might be left behind a bit, which would not be quite so ideal. But something like this, for example. Let's try that again. We've got our fib retracement. Let's say we come into the 38.2. We're looking for the same thing around this bounce on an intraday basis. So 30-minute profiles. We've come into our level around here. We then get our following day open above the previous day's value area high, and we could look to maybe take the entry on this. So we're using a combination of our higher time frame bounce and area of interest, and then an intraday profile set up to give us the actual trade entry. A similar thing over here. So we've opened above, come back into that value area high to then move off this level. If you were doing it as part of a bigger setup, then I'd make sure the stop loss for this was still behind our higher time frame support. So don't go too tight with that for those trades. Let's look at what we've got now. At the moment, we've got a pretty decent uptrend going on. We've got a few bounces off our trend line here. We might be coming back for another one at the moment. Probably happy to take our fib from this low here up towards this high. It does put us around the 50% now, but obviously not the trend line as well. Whether we can get a bit of a push lower, just a short continuation down here into that point where we've got those kind of multiple confluences lining up would be ideal. We've got a good channel continuation, so good indication that we've got strong momentum within this current trend. And for these previous highs, that's obviously the next big zone of resistance above would be these larger highs through here. So possibly a chance for a bit of a short-term pullback into this level to then continue this move. Again, it's got to be a bit cautious with the geopolitical situation, but from a technical standpoint, I would say it looks good. We've got a nice counter trend going on as well. So yeah, if we can get just to push down towards this level whilst keeping this counter trend line intact, that would be pretty nice, as we can get a nice early entry on the break above that level, if that is to be the case. Channel could be the first target, maybe seeing it up towards that next resistance if the opportunity comes around. But yeah, as is, I think that looks pretty decent. Today was pretty bearish, opened below the previous day's value area low, didn't quite come for the retest, but we have seen that continuation short for now. If this closes today like this, we got maybe a bit of a B shape, which would show a lack of acceptance at the high of the day, more acceptance at the bottom of the day. Following day might get that continuation short. So again, keep an eye out for that as well. No worries, yeah, nice, looks good. Looks good. Just quickly check the weekly profiles. Weekly profiles can also be good. Going to use them in the same way that we are using the daily ones. In this case, we've got a nice P-shaped profile for last week, coming in to fill some of this thin volume on the tail end before we maybe continue up. So that also looks pretty good. Nice. Cool. So tomorrow we're going to be looking at market profile. If you haven't already and you want to be added to the LAT market profile, we just need your TradingView username, which you can either find up here or on your homepage area. If you just email that to us, we can add you to the indicator, and you can use our one without the subscription. It's going to be the same signals, same information. It looks a slight bit different, but we'll talk about that tomorrow. It's all the same otherwise. Looking at dollar yen, we're also touching a trend line. Yeah, we had a little look at dollar yen yesterday, I think. Let's see how that's going on. Okay. Okay, well, we were looking at the gap with the fib retracement, which is kind of blown through the gap. That's fine. I would say it still is more or less okay, though. It's not completely destroyed the whole trade at the moment. It does look like we're in the works of a nicely formed inverse head and shoulders. So probably even better, right? If we can get a nice breakout of this, stop loss behind the lows, then continuation up, that would be quite a nice thing to see. We had a similar situation here with our inverse head and shoulders. Not quite as good of a neckline, but still a nice shape. Whether or not you want to claim that as a head and shoulders, but yeah, I think that still looks quite nice as a potential long. Again, if this holds up, that is. If it doesn't, then it will just be, this is obviously why we want to wait for that trigger, that confirmation on the entry. In this case, would be the break of the neckline for the inverse head and shoulders. If that does not happen, we won't be taking that trade, and that'll be that. Okay, so it's always important to make sure we've got a good breakout entry point for those trades. A nice counter trend line there as well. Nice. Well, we've got a couple of things to look out for there, so we'll check those out tomorrow. We'll see if there's any more developments. Otherwise, look out for those. Well, my trade today, I had a bit of a short-term short position in the Nasdaq. It was only a short-term 5-minute trade, so I was still a little bit bearish on the equities at the moment, but obviously they're still continuing. So I'm only taking very short-term trades here. I was going just on the break through these lows, a bit of a pullback and a bit of a retracement into a bit of a fib level, and I was short somewhere. Yeah, so I was short on this first initial move up. Bit more of an aggressive entry for this. I wanted to be fairly in and out pretty quick. I was down somewhere along here. Nothing massive, but coming off these kind of recent coming off these recent highs, we had this pretty aggressive sell-off from this level before. So looking at these areas where we have had some pretty aggressive sell-offs. So that was the zone that I was looking at for the bounce. With these big aggressive sell-offs, it is likely we do see a bit of short-term, well, you might either see the same reaction as you saw last time, or we just get a bit of an aggressive push and then it continues up as we've done here. On account of the current rally to the upside and the geopolitical situation, I'm not too fussed to hold a trade for too long in this current condition. I want to get pretty in and out. I'm happy to take a one-to-one. I don't want to hold stuff for too long. So for me, that was it today. I did take a break even actually on cable, which was, or maybe a very small loss on cable, which was annoying. Bit of a bit of a 4-hour downtrend here. Not the nicest fib retracement. We did come into a bit of a fib zone here. We also had the gap from the previous week open, which is just being filled now. So I was looking at this level, took the initial kind of head and shoulder here breakout. I entered on the retest back on the neckline. So I was in through here, stops above those highs. My first target was just down towards these lows. Again, I still don't want to be in anything for too long, but the maybe bigger target was the much longer term trend continuation. Now, I did trail it just because I thought, don't want to give this too much room. Unfortunately, it was actually that move that got me out, and we did get a nice run to the downside, but it still wouldn't have hit that first target anyway. So, a bit annoying. I do still quite like the setup, so I have got some some alerts at the top of this move and the bottom of this move. If it starts to break out, I might be maybe looking for another entry, but I'm just going to see how this goes. Everything's a little bit choppy, a little bit hectic at the moment, so quick in and outs. I'm happy to take those for now. All right, I'm going to have to finish up now. That's right. So I hope everyone has a lovely evening. We'll pick this up tomorrow. We'll look at the market profiles. And if you have any questions in the meantime, feel free to pop us an email. Nice one. Cheers, everyone. Thank you very much. Have a nice evening. Bye. Cheers. Bye.